you know, there's, I get a lot of, I'm sure you do too, in various social channels. I get a lot of ads for automation software, and I feel like I see a lot of cart before the horse type situation where I know for me, like I want to automate something that I know works that maybe I've developed or been kind of worked on, but but I'm seeing these claims about, oh, you don't need to know how to trade. You don't, you just turn the thing on and it just makes money. You're going to make 5% per month. And so, what's your take on, like, if someone is just starting with the idea of automated trading, um, do you think they should be doing the research first and then kind of get into that? Or do you find a strategy that you've seen someone else create and then you sort of take that and apply? Where should someone get started with automated trading?
Yeah, I really think that having more of a discretionary background is extremely helpful first, because you've seen the vicissitudes of markets, you see where the up and downs come from, you see how retail traders behave. You're kind of noticing where is activity showing up? Why these zones and not this zone? And you start to develop a thesis for the market, right? What drives price action? What drives behavior in markets? And I think that that's incredibly important. Just taking any type of indicator and any type of strategy and pressing go with an automation button doesn't guarantee success, right? In all likelihood, you're likely to lose money if you follow that approach. So having a good understanding of how markets work, how the structure of markets work, who's on the other side of your trade, what causes price to move, even just breaking it down as simply as saying, what category is my strategy in? Is this a trend following or momentum strategy, or is this a mean reversion strategy? And what are the characteristics I should look for that would support the success of this strategy? How can I test it far back enough with market data so that I know that it will stand up in the future? And then how can I walk forward that test in a way that keeps me from potentially being biased about the results and putting risk in front of something that's just going to fall apart the moment I hit the go button. So I feel like there's a lot of requirements, sort of prereqs, if you will, before you get down this path into understanding what it is that you're trading, why you're trading it, what supports your thesis, what is typical for markets, and really kind of what are the performance metrics for how this strategy should behave in the future. And that should guide your decision as to whether or not you're ready to put risk in front of it, but then also what metrics you're going to look for once you've put live capital in front of it, to know whether or not it's actually working or not.
Gotcha. Yeah. I totally agree because I've spent many years back testing various strategies. And so when I think about automation, I think more about, I want to execute something that I believe in. And for me to believe in something, like you said, I need to experience a few cycles of whatever the strategy is. You win some, you lose some, and maybe have that in different types of markets and things.